So, welcome to this Sifted Talks on Beyond Sales and how to plan your go-to-market strategy for 2025 in partnership with Stripe. We're waiting for quite a few people to join us, and hopefully they all managed to do so by now. So we today, my name is Mimi Billing. I'm a Europe editor at Sifted, and well, I have a great panel here today, and so we're going to go through. I'm going to talk about like loads of questions about like the go-to-market strategy, and I just want to say like first, thank you to Stripe who is partnering with us to do the Sifted Talks. And as a founder, creating the perfect go-to-market strategy is obviously a top priority. But in today's competitive market, how can we be sure to getting that right? So we're going to talk about like this shift from sales driven to product led and what's the strategy involved in that. So we were discussing how to prepare your sales and marketing teams for the year ahead, and from sales driven to product led, what's the difference between the two, and which KPIs will be good for doing specific these go-to-market strategies. So I'd like to introduce you to a great panel. So thank you very much for joining us. We start with Michelle E, co-founder and CEO of the UK fintech startup Abound. And then we have Oana, Jinga, co-founder of the UK startup autonomous robot startup, actually, Dexory. And we have Katharine Spooner, who's principal at Speedinvest, one of the most active early stage investors in Europe. And last but not least, Kamael Sugrim, head of investor partnership in Europe and beyond for the global payments infrastructure company Stripe. Thank you all for joining me today. So if we are gonna kick off, why don't I start with you, Kamael? Like, can you explain to me like how the go-to-market strategy has evolved in recent years, and what factors are driving these changes?
Yeah. So maybe I'll kind of date myself a little bit here, but like 20 years ago, I think that, software and technology was a very sales-led strategy. And that's because there was just a really need to educate consumers on what the technology was and then how to adopt it. Fast forward to today, and I think that we've got like a very, technologically savvy universe. And so we're seeing the shift from maybe a sales-led growth, where the sales team is responsible for sort of educating the consumer on a product, and adoption to what's called product-led growth. And that's a bit more of like a go-to-market strategy where like the product drives the customer acquisition. So the product is, maybe self-serve or like a freemium model or a usage-based pricing. And those attributes of the product means that the consumer can now adopt it much faster. And so that kind of product-led growth go-to-market strategy has lended itself to product-led sales, which means that sales teams now are focused a bit more on expansion and conversion of someone who's used the product for free or started using it, versus actually selling kind of like the bells and whistles of the product. It's more, I think, of a value-based selling that's happening in go-to-market than it was a features and functionality selling that we saw, many moons ago.
Okay, Katharine, from an investor point of view, is this something that you see as well?
Yeah, absolutely. It's so interesting because I think we've observed a really significant shift, as we've already mentioned, this move to PLG, product-led growth, dominance within the market. But I think there's probably something else to it too, which is that AI tools are increasingly used to refine targeting, or personalize customer experiences, automate lead generation, which means in turn that generally speaking, there's faster time to revenue in terms of sales cycles. So significantly shortened sales cycles. Customers, we mentioned this a little bit, but they can experience so much value from the freemium models or from free trials before making purchasing decisions. And to us as a VC, that's really attractive, because there is a really clear path to revenue.
Okay, so if I go to Michelle, have you used these kind of freemium models as well, or have you been more as a different? What would you say?
So for us, because we have two different products, I mean, they're related, but one is a B2C product, it's digital lending product. For that one, I would say is mainly product driven. We also have a B2B product, which is, I think it's a hybrid of product and sales driven. So the context, maybe provide a bit context of our product, because that's important context on why I think it's one is a product, one is a hybrid. We are an AI-driven credit technology company in the UK. We combine open banking and AI to understand the customer's true affordability. And we built that technology from scratch. That is supposed to be, we built that one to replace the traditional credit scoring approach, which most of the banks, so if not all of them, are currently using. We use that technology we built in-house to originate loans ourselves. So we basically lend directly to consumers. That's the B2C product that we are talking about. So it's a digital lending product. For that one, the customer acquisition channel is primarily partnership driven. So like we have aggregators, for example, ClearScore and the Money Supermarket. It is a panel. So we have a lot of lenders in the panel. Everybody shows their product to the customers, and then the customers can choose which one to use. So from that perspective, we really need to have really attractive product from the terms perspective. So that is primarily product driven. That's a B2C product. And then the B2B product, we provide our credit technology to other lenders and banks to empower them to make a better decision. Because from what we have done so far, we originated like 600 million pounds in the last few years, and our default rate is like between 50 to 70% lower than the market. And we also proved that we can serve 6 times more people than we would other do if we only use the traditional credit scoring approach. So we use that product ourselves for the B2C product. Now we are also providing the technology to other partners, like business partners, banks and the non-bank lenders, to empower them to make a better decision. That one I would say is a hybrid product and sales. Product means we build a really, really good product. We eat our own cookies. We prove it really works. So there's a lot of value of the product. But on another side, as a relatively new startup, we are only in the market for like 4 years. Not many people know us. So we need to basically have the sales driven to break into the market to make sure that it's a great product, but we need to make sure people actually know the existence of this product. So for the B2B one, it's a hybrid of sales and product driven.
Yeah. Is it also about we talked about the education aspect here, and I suppose that you have to also educate the banks what you can do in some way, and that's why it becomes this kind of more hybrid, which is like super interesting. And I suppose like Oana, for you, robots in warehouses or autonomous robots in warehouses. I suppose it's a little bit of mix there too, or are you mainly like product led now?
So it's a very interesting question, because it's a debate that we've been having quite actively over the past few months. Similar to Michelle, we're actually even newer in the market. We launched just about 20 months ago into a very traditional sector, which is logistics and supply chain. So as much as I would like to kind of shift a lot more towards the product, it's still very much a sales-driven strategy. And then I would have to say, I think a few people mentioned, but kind of building that reputation in a sector. Also, we introduced a completely new category of products and robotics for the supply chain and logistics sector. We use robots to scan things, not move things around as the traditional models. So all of that kind of has to still be person to person and driven by kind of explanation, ROI models, business case building. A lot of the things obviously can't be driven through the product. It doesn't mean that the product has to suffer in terms of quality, reliability, nothing to do with that. It's just more obviously from the sales driving tactics are still kind of person to person. The one thing, just to kind of move maybe into a slightly different kind of strategy for us, what's very important is actually the community-led go-to-market, let's say. So we use a lot of kind of influencers in our space. We build a lot of relationships. We rely on other people talking about us. Maybe not necessarily new, but I think within the enterprise sales, definitely it's something that's been growing a lot, especially obviously with the whole influencer culture on LinkedIn and other channels.
Okay, yeah, no, definitely. And I suppose that that when we are talking about like go-to-market strategies and so on, it's also kind of interesting, like, why, not just why, but the different trends. Are the different trends, are they changing so quickly, like from one year to the next? I think this is something that's like from people on the outside might not know about this, and even some people on the inside might not know about this. So it's kind of interesting. I mean, Kamael, what do you see? I mean, do you see there's a different strategy to go to market now in like 2025 than it was 2024? I mean, is it changing that quickly?
Yeah, I mean, I certainly with the, rise of the number and volume of AI companies, we're definitely seeing, a shift in the way those companies go to market, just as well as also the way, as Katharine said, companies that are leveraging AI go to market. I think the number one, so like, my team works quite a bit with venture-backed startups and scale-ups, helping them figuring out how to kind of like grow their businesses at a rapid pace. And like the number one question we always get from startups is like, how should we, figure out our pricing, and like how should we think about it? And I think, historically, like pricing has been sort of like this thing you did in an Excel spreadsheet that you did to cover your costs. Like you looked at it in like that kind of like, flow. And now, like, I think we're seeing a lot more, startups, or we talk to startups a lot more about thinking about a bit more around like customer centric, like what is the value that you're providing to the customer? What are they willing to pay for that? What is the frequency that they're willing to pay? So the whole conversation around pricing, and it being more customer centric, and just in general, sales in product driven sales being more customer centric versus features and functionality, like that's kind of, I think, a really big trend. And I would say the other one is probably a lot more around like usage based billing and pricing. So like, normally you'd see like a fixed price in the market, and now we're seeing a lot more variability, and users needing to like show that kind of optionality, and kind of like reduce complexity in pricing. So I would say like those are the things we're seeing the most.
Yeah, exactly. But not having the fixed price, and also making it more difficult to having your sales strategy, because some way you have to be very much like getting to know each and every customer to actually set the right price in that case, which must be kind of difficult as well. Is there any challenges that come to you, Oana, for example, like when you try to do these kind of like both pricing and so on?
Yeah, it's again high topic, I think, on the usage kind of driven pricing. It's quite complex when you have obviously a hardware software product like we have, because obviously from a overall kind of financial perspective, we do have a high upfront cost in building those robots and getting them out. So clarity, our model is a subscription model, so the customer pays for access to our digital twin platform where all the data from the robots kind of go in. So they don't actually pay for the hardware and then a subscription on top. It's all kind of bundled into one. It's not something that we've necessarily kind of adopted in terms of kind of personalizing and pricing too much. Again, going back to the sector we're in, everyone knows each other, everyone talks to each other. So obviously that personalization can kind of hit you backwards in the different ways. But there is definitely an element of adjusting based on set criteria. For instance, like the size of the warehouse, the number of goods that they have, the movement of goods. So I think everyone should kind of keep in mind that there needs to be a level of adaptability of the pricing and the model to the specific customer circumstances, but that from our perspective needs to be very, very clear and set in stone, and very transparent as well.
Yeah. I just want to say to all the attendees that are listening in to us today, please use the Q&A box at the bottom to actually ask our great panelists questions, because it's rare that we have so many experts in one room, right? So it's a great opportunity to do that. And I mean, I don't know, Michelle, I mean, how do you have the set pricing, or do you like and how do you like do that? I suppose like with testing as well, because AI products, obviously it might not cost anything almost to create some of those products, but you can obviously take a kind of like big markup, and how do you set that for everyone to be happy? I mean, Michelle, if you...
So again, it's the pricing strategy is different for the two different products. Maybe I will take the example of the B2C product, because for B2B, it is really like, a lot of negotiation case by case. It depends on a lot of more complex factors. And then, but on the B2C side, the consumers, I think one of our biggest strengths is the AI decisioning tool which we build in house. The decision includes should we lend to this customer or not. It's not based on this kind of a traditional outdated credit score based on history. It's based on the real-time bank transaction data the customers shared with us. We look at then we have very detailed X-ray of the customer's financial situation, up-to-date financial situation. So there are a couple of very important decisions we make. One is that should we lend to this customer or not? Yes or no. Second is that if we lend to the customer, what's the pricing? So it's a because it's consumer, it is big volume. We can't do we have to automate it instead of do every single case and then do a manual underwriting process. We have to automate the pricing. We have built like a AI-driven in-house AI algorithm to based on the information we have, the customers shared with us. Again, it will depending on a number of factors for us. One is that the customer's specific situation. What is the risk of profile associated with the customers? That's what we call probability of default. And secondly, we need to consider our own situation, for example, our funding costs and our operation costs, and what is our appetite, what is a markup a margin we'd like to take. So that bit is more like it's more like a more systematic, but the customer's individual risk profile is really important, and we use a lot of information to understand it, really understand it, the customer's willingness and ability to pay, and that is the important factor for our pricing, and we do that one from our AI engine.
Mhm. And I mean, Katharine, when you are talking to obviously all the kind of portfolio startups that you have, and they might be looking to do like, well, should we do sales driven or product led, like go to market strategy? I mean, what do you how do you get them to choose between the two, and what do you actually, how do you help them in this?
Yeah, that's such a good question. And we have just over 300 companies at Speedinvest. So I think there's probably very different advice given, whether it's sales driven or product led. So if I split those out into two distinct buckets, if we look at the sales driven growth approach, to us, it's very suitable for perhaps more complex B2B solutions that require relationship building. And the downside to this is it is often very high CAC, but equally it's justified by fairly large ACVs, average contract values, and longer customer life cycles. And typically I'd say this is preferred in more niche markets or industries with limited self-service opportunities. And then there's the second bucket, so product-led growth. And these are really kind of ideal for consumer products with mass market appeal. The upside here is of course lower CAC, shorter sales cycles, often because of self-service models. And the reason why I think we particularly like that is it's often actually very scalable. So it's attractive to VCs when we're considering exponential growth potential. So yeah, that's how I would see it in those two distinct buckets.
Yeah. And Kamael, I mean, you obviously kind of helping startups and so on. What do you like to add to that? I mean, do you have similar views as Katharine?
Yeah, I mean, I think that's definitely the case. I mean, although we are seeing, that there are some, kind of like B2B companies that are pricing kind of like on a maybe not a multi-year contract basis, but are looking at offering subscription based pricing or to a lesser degree, but still some usage-based pricing. So we do see a little bit of that shift as well as they have more engagement with their customer or but I think that in general, like, yeah, the more complex industries that have like, a lot of, especially like if they have like regulatory compliance and that there's like, there needs to be that kind of review of the product, that usually lends itself a bit more to sales led versus like product led.
Yeah. So what do you think then are the critical steps for a startup that are either going to, go to market in 2025 and is looking at like, okay, so how should we do it? What are those kind of steps? I mean, if it was some of you, Kamael.
Yeah, I think the first one is to just like figure out like how your customer uses your product, like, and at what price point they're willing to pay for your product. So like, are you a product that's valued at $100, you know, but you're pricing it at $1,000, you know, like there's like that discrepancy. Understanding kind of like what your customer value is really important, and centering your pricing around that. Like I said earlier, I think sometimes, you know, startups, and, you know, we get it, can be kind of guilty of looking at their operating model and saying like, okay, I've got a price to cover my operating model, and then I've got to, like, you know, kind of like they're sort of very embedded in a spreadsheet when they're doing their pricing. And what we kind of say is like, you take a step back and, you know, figure out to match the pricing with the frequency of usage. And then I think the other thing is to understand, like, when you're doing your kind of like pricing or figuring out which strategy you want, to really be flexible in testing some options very early on. I mean, I think a lot of startups are like, oh, I've put my pricing on my website and now it's set in stone and I can't undo it. And, like, you know, the reality is, like, I don't think that that's the case. I think you can be a bit more flexible and really, like, you know, spend some time determining like what's the best rhythm and frequency to engage with like your user when it comes to that.
I can tell you that we have so many questions in our Q&A box. This is amazing. Everyone is really into this topic. So if I just, I'm going to pick a few questions now and then come back to the questions later on. But if you just like, one that's been very popular that people actually really want to hear, and I know this is a little bit like on specific tools, but it's like, if you were Mike S, thank you for this question. If you were setting up a growth tech stack today in a business-to-business startup, what tools would be a must-have? And I mean, maybe Oana, you want to, or I mean, whoever that feels like, I know this.
No, happy to start. And I think the number one thing is definitely consider a good CRM system. Because I mean, the question was around starting up, I wouldn't go for the big players and obviously spend a ridiculous amount of money. But being able to track the conversations with early users and early customers is super, super helpful. I think going back to some of the points earlier for learnings, but also to be able to really stay on top of those conversations and move them quickly through the funnel. So obviously with that CRM then comes an element around like how do you feed data into it, and obviously which customers do you reach out to. We have a few tools, and I think going back to the trends question earlier, there's so much out there now to support our sales team to find the right contacts from the right companies, the right ICP kind of filter through. So there's quite a few kind of companies out there that are supporting obviously kind of that initial reach out that then connects very nicely into the CRM and obviously triggers alerts for follow-ups and everything else. And probably the third bucket, so obviously finding the contacts, tracking them, and then the third one from my perspective is a very good product tracking tool. So really understanding how users are obviously can utilizing the product, where do they spend the most time, and again, if that's possible, to link back into the CRM to trigger kind of prompts to reach out to a customer if you feel like they might be dropping off or actually like using it a lot, and then trying to understand what exactly is driving that. That would be very, very helpful as well. So I think, yeah, those three buckets to me would be essential to start with.
Yeah, great answers. And I mean, Michelle, you are also, you know,
Yeah,
obviously, do you have?
Sure, I was about to add to that. I think it's really important if it's a digital journey. It's really important to track the you know, the conversion and the drop off, so that you understand like what Oana was talking about, how much time the customer is spending on this page. 20% of the customer drop from this page. A couple of tools we use like Postgrad, and it helps to track the you know, the conversion, so that we can feed it back to the product team to understand, okay, maybe I need to change this specific page because it had by far the highest drop-off rate.
Yeah, good point.
And-
And also, I mean, both, it's, I was just wanted to ask like both Oana and Michelle, like when you actually you started off, did you have everything in place, or where did you make
No.
your mistakes? No,
No,
Michelle,
I
can
think
tell me you.
I think a mistake people will make is that you try to have everything in place from day one. That's one of the biggest mistake people, you know, might make in the context of startup. Normally when you start a business, it's, you know, you're short of everything. You're short of money, you're short of resources, you're short of time. You need to ruthlessly prioritize and trying to, you know, find the balance between MVP and higher quality. So I think the approach we always take is that we don't like to test people's appetite, as quickly as possible. So instead of building like a product which is the most comprehensive, a perfect product from beginning, which means it might take years to go to market, we try to build like a small MVPs so that we can test it. At least we know, are we directionally correct, or we are not. So I think it's absolutely not advised to try to build everything and have everything in place, because it's just the
Yeah.
norm that you are short of everything almost.
Exactly. So yes, don't be afraid of actually going out and testing it before it's completely finished. So that's a good one, Michelle. So I'm going to take another question here and try to get Kamael and Katharine in here as well. So yeah, I think we have kind of answered this for both business to business, business to consumer. How are the sales team adjusting pricing with changing AI trends, with cheaper, better AI models and so on? And are the cost savings passed on to them? This is by Sabine Cow who's asking this question. So Katharine, what do you think? What have you seen?
Yeah, I think it's such a good question because it's obviously been extremely relevant even in the last week or so. So in short, yes, sales teams in both B2B and B2C sectors are increasingly leveraging advancements in AI in order to optimize their pricing strategies. And I think the reason for that is because they're able to analyze market data in real time, which means that there are key adjustments rolled out relatively easily. So that would include anything from dynamic pricing strategies. I know Kamael mentioned that adjust prices based on competitor pricing, demand fluctuations, inventory levels. We especially see this in consumer-facing companies. And then second of all, to which touches upon the question asked, many companies I think that we've seen are passing on cost savings from improved operational efficiencies from AI. For example, if AI reduces the cost of customer acquisition or any kind of operational expense, these savings can then be reflected in lower prices for customers, which in turn enhances the competitiveness and subsequent loyalty of the platform. And then the final thing that I think is super interesting to mention is the personalized pricing component. So the fact that AI enables companies to segment their customers based on different factors, whether it's purchasing behavior, demographics, therefore allowing tailored pricing strategies, which in turn maximize customer satisfaction.
Yeah, this is really interesting. This is also something that someone else is asking. Maybe Kamael, you can try to build that into this, as Katharine is saying, but because Eugene here is asking about the impact of AI on GTM, like in go-to-market strategy, and like what are the key opportunities AI offers in your go-to-market strategy? I mean, particularly in the business-to-business space. And I'm thinking, like, as you mentioned, Katharine, I mean, obviously AI helps in like, both with knowing your customers and so on. I mean, what to say, Kamael? Is it also helping in other ways?
Yeah, I mean, I think like, it's obviously helping, users understand their customers more and sort of like build a bit more flexibility. So obviously like we see at Stripe more demand for different kinds of like billing and pricing models and the supportability of those, and like the ability to like adapt and change your pricing based on like what is happening with the user. So like I think we see that that's a direct result of like AI and cost savings. Like a user will say like, I want to actually like change my pricing for this particular band of customers, or I want to have a new kind of pricing, or I'm going into international market and I want to have a completely different kind of pricing due to regulation. So like I think we're seeing that like the results of it when it comes to folks that use Stripe is that they're really demanding from us like that kind of like flexibility to change and to like either pass those savings on to their customers in a really easy way, or just like add more value on to what they're charging for.
Yeah, and we'll take one more AI question before we move on to a few more other things. But it's like, obviously I think everyone's like either a bit worried or a little bit like, how should I think about this? Because obviously AI agents as well is something that everyone is talking about. And we have one question here from Bernardo, and he wants us please to talk about AI agents in sales and marketing functions. seems like we will be one of the main themes to be automated and enhanced via AI. Would love to hear everyone's thought. So everyone's thought you might not get, Bernardo, but we can start with like Kamael, maybe.
AI agents. Oh, that's a good one. So I
If
think
you want to.
I don't know, like I think, in terms of like, them being used as an acquisition tool, I think we, obviously see startups that are building that product. And so like we see them, trying to price that service. And there's still, I think the jury's still out on how that gets priced in terms of like value and, like is that like kind of like a subscription based, usage based? Like I think that's like still kind of like that model, the monetization behind that model is still for me, the jury's still out on it, but I can say like yeah, I think that's like for me, I think that's like an area where I don't think we really know the impact that it'll have on businesses yet.
I'm sorry to put you on the spot there, Kamael,
No.
but I'm going to put Katharine on the spot here too. I mean, what do you see, and how are your like, portfolio startups thinking about this as well? Because obviously, are they supposed to just like buy these services to just get their sales and marketing functions up, or should they be like try to work on their AI themselves? Or I mean, what do you say to them?
Yeah, I think it's super interesting to think about what best practices might be, particularly when it comes to aligning with customer needs, especially as companies grow as well. And so I guess if I take a step back and I think about, if a company decides to like test raising prices, for example, and then later decides to lower them, I would say that there are probably some ways in which there are kind of best practices to handling that. And that would include things like transparent communication. So, explaining the rationale behind price changes, for example, grandfathering existing customers, which means that, you're considering keeping existing customers at their original price or offering them a loyalty discount when lowering prices for new customers. And then lastly, I think the other thing to perhaps emphasize is monitoring feedback. So actively seeking customer feedback regarding the price changes to understand the sentiment and then adjust strategies accordingly.
I have a question for you here, Michelle, and then I'm going to go on to my questions for a bit, and then I come back to the questions that our audience is asking. But Michelle, because you mentioned a little bit like, you should really try to focus on a few things when you start off. And Saskia Hill here has asked, when should you bring marketing into the mix for an early stage startup versus when to bring in sales? And does it differ for business to business or business to consumers? What do you say, Michelle?
Again, you're right. It's different for B2C and the B2B. So for our digital lending product, because we can only lend to customers after we get the license from the FCA, so it took us about 7 months to get the license. But then we are not sitting. So technically, we can only get our like official customers, after we get the license. But we're not sitting there and doing nothing. We started doing some marketing testing at a very early stage. So the message is that, hey, we're going to launch this product. Please register with us if you are interested. So before we launch, we have about like 20,000 users who signed up to show their interest. We can't lend to them. But we tell them what the product is and sign in the interest. So I think the question is, what is a good timing? I would say as soon as possible. You need to do some sort of like a market testing, even if it is MVP based, even if it's like, market research based, that is quite important because during the process, it helps you to shape a lot of things, including the product, including the effort for tech development. It includes your business plan and what kind of product, what kind of forecast, and it helps you to build a lot of data points. So I think it's something worth doing as soon as possible, but you need to do it at in different ways.
Yeah.
I think
Okay. I
if
hope that helps, Saskia. Yeah. Oana, please.
No, I just wanted to add a point on that one, and I think kind of building up on what Michelle said. I think it also depends on your like how early, first of all, and then your founding team and what strengths you have in there. Because to me, the most important thing is to ensure that you communicate what you're offering properly. And if that requires some more kind of marketing support at that product marketing level, then you should probably kind of get that in quite early if that strength is not already in that founding team. if the founding team is very good at selling, then obviously kind of like let them do that for a while, and then you can kind of start building on it. But I think it's very hard to kind of necessarily give a direction without knowing where you're starting from, because the clearer you are and the more kind of the more succinct you are in explaining that value proposition, then the quicker you're going to get the results. But if that's not there and your team is fundamentally very technical, for instance, has never done kind of the commercial side before, I would definitely recommend bringing somebody in very early days to put that in place.
Yeah. I'm going to go back to some of my own questions and then come back to the questions that our audience is giving us, which is great. Thank you so much for those questions so far. And Katharine, I would like to talk to you about like, so if businesses need to do this like shift from sales driven to product led, I mean, is it difficult? Can they do that transition quite easily, or are there like obstacles to that?
That's a great question. I think it really depends actually on the company size, the stage, the market that it operates in, and its current progress, and how it's currently performing on whichever sales strategy that they're doing. There are ways in which they kind of build confidence in order to like test how effective a future go-to-market strategy might be. And I think one really key way of thinking about that is actually being very metrics driven, both in terms of how the company is currently performing and what it might reach, what it might get to. And so the metrics that we would typically look at when there is a company considering making a transition like that would be anything from long-term CAC, customer lifetime value, what the MRR is over the ARR, which is often like really critical for perhaps insinuating how strong, how predictable the revenue might be. Churn rate, time to revenue, and NPS. By looking at these KPIs, I think it becomes clearer, what that transition might look like. And then if I think about what steps might be for a really successful transition, it would include anything from product redesign, kind of looking at data infrastructure. So thinking about which analytical tools to track product qualified leads is super important. And then there's another component, which is cultural shift. So thinking about how do you retrain teams in order to focus on customer success rather than what might have been traditional sales quotas. So yeah, I think it's relatively complex, but can be broken down into those different buckets.
Yeah, I mean, Kamael, do you see that as well? Like, I mean, do you have anything to add to that, or do you think that's...
Yeah, I mean, I think that's for sure what we see as well, which is that like, I mean, I think for us, like, it's also like we have a lot of conversations with startups, very early on in terms of when they're designing and building their product. And I think it's like you may, as Katharine said, have like an initial moment or initial period of time where you are doing sales-led growth. And so like, but you have to design your product for like, in 3 years where you want to shift to a product-led growth, like when you want to like actually be able to either have, users self-serve onto your product and drive adoption that way. And then the other thing I would say that's really important to keep track of is actual like product usage. And so like sometimes people look at product usage through the lens of churn. But you can also look at product usage through like, how many times is there like a login? Like how many times is there like access or usage of your product? Like what is like, if you're selling licenses, like how many licenses are being used and how many are going unused? Like it's kind of like that to me, product usage is something really important to keep track of as well. And that will kind of dictate in some ways when you can move to move from sales-led to product-led. Like, is your product stable enough and being used frequently enough that it can sort of like be autonomously self-served or used even in a freemium model?
And I mean, I think it's interesting because both, I mean, Michelle and you, Oana, said that you had kind of a hybrid models as well. And it's like, we have like spoken like about either product led or like, it's kind of interesting. Oana, how's that worked for you? Do you feel like is it easy to be like doing a bit of both, or do you feel like you want to move towards one specifically? Like,
It's quite a complex one for us because of just the way that decisions are being made and who actually ends up paying for things. So, for instance, if we release a new features, it's not very easy for our actually end users to make that decision acquiring that feature. They have to kind of see raise it internally. Being a large enterprise sale, it has to go to procurement team, has to sign that off and everything else. So I don't think we'll ever get to a point where everything is going to be product led, just because of the complexity of kind of getting that signed off in an enterprise. Hence, yeah, we actually rely a lot on our customer success team to identify some of those triggers, and like Kamael said, kind of being on top of like that usage and understanding, oh, actually they keep trying to access this feature, which is maybe locked for them. Let's kind of reach out and then engage that conversation. So the product is there to show the signs, but for us, it's still the sales team or the customer success team kind of doing that transaction, just because of the nature of the business of our customers.
Yeah. Katharine, you mentioned so many different metrics before, which is great. And I think that leads us kind of well into like also KPIs and like, I mean, because obviously we know there's like loads of KPIs out there. We could measure, we could measure almost everything, right? But I suppose as well that, you know, you are, there's some KPIs that's more important than others. And I mean, what do you think? I mean, if I go to you, Michelle, which ones are the most important ones, do you think, to focus on in the beginning at least?
I think it depends on the stage of the company. In the beginning, you sort of need to prove that you can scale. There is enough interest to do it. And then, you know, very quickly, you need to start shifting that kind of unit economic cost, that kind of mindset, because like grow at any cost is just a fantasy model, which, you know, is less and less popular now. We focus a lot on economics. That's how we achieved the profitability 2.5 years after we launched the product, because we look at, you know, how much we charge the customers, what is our cost. And then what is the conversion? Because I mentioned the product conversion in the beginning. For the specific business we are in, product conversion directly leads to the cost. So it's important part of the sales as well. If, for example, if the product doesn't convert, it means that we are going to spend a lot of data cost at the top of the funnel, but it doesn't lead to sales, for example. That is bad economics. And so unit economics really it's very important. That's one of the KPIs. I would say in summary, it will be the volume, the potential growth, and also what does it actually mean from the unit economics perspective. All that kind of stuff matters.
So I mean, Oana, I don't know if you have like measured like, you know, when you're doing your KPIs, maybe it's like you have so many to choose from, and you maybe spend a lot of time on things that isn't that necessary. I mean, what have you found that you like that you maybe overlooked some things, but also like spend too much time on others?
I think we've moved a lot from volume to quality, I would say. So I mean, just for context, we are kind of late Series B now, kind of into a scale up stage. So our team's grown a lot. We've got obviously like a lot more data to base our data-driven go-to-market plans on. Probably a year ago, I mean, working on 15 customers, there's no trend in there. It's just like a lot of gut and feel, right? So now that we have that level of information and quantity, we can focus more on the quality. So at every single step in the funnel, obviously we focus on how many MQLs we're bringing from marketing, and then how that conversion looks into SQLs, and then how long every single customer stays at the different stages in our pipeline. So at every single step, we're tracking things very, very well now. But the number one thing is how do we kind of increase that quality from stage to stage. So I think, yeah, overall, there's probably a lot to cover there. But kind of my advice to everyone would be to map out like what is your customer journey. Start from, okay, where are we now with some of these numbers and what conversion rates are we seeing? And then continuously kind of work on improving that. And that touches probably on everything else that people have said already on the call, like reducing the sales cycle, increasing the ACV, reducing the cost of acquisition. But initially get that benchmark and figure out maybe 1 or 2 KPIs at each stage that you'd like to track. Give it a little bit of actually acquiring data, and then start discussing internally how you can improve on it.
Okay, great. I mean, both Katharine and Kamael, you both nodding, so I suppose you agreed. Is there anything else that Kamael, that you'd like to add to this, or do you feel like?
I think one interesting one for me is always churn and like taking churn apart. So for example, like, do you have churn because someone sort of like signed up for your product to use it and then just like abandoned it? Do you have churn after like a certain amount of usage? And then probably on the flip side of churn, I think is like win back, like especially if you're more of a later stage company, like, you know, did you have a set of users that have churned on your product that you now want to look at, maybe because your product is a bit more further along, or for whatever reason, you know, you have a bit more functionality to offer them, you decide to think about like win back. So for me, I think like churn is actually just like a very interesting, complex thing to track. And if you can break it down, you can actually like really influence like your top line revenue.
It's great. And by answering this question about KPIs, I think we also actually answered some of our questions in our chat. So I hope Garrett Thunderized, I hope that was a good answer for you. Anyway, and I with that, I'd like to actually turn back to some of the questions that we have from the audience, because you know we're here for them, right? So and I think I'm gonna, you know, because obviously both Abound and Dexory, you're like scaling up, you're kind of Series B and so on, and like done well. And a person here, a concept of MS, asking, like many companies struggle with the like value of death between product market fit and scalable growth. So what are the most common mistakes you see founders make in their go-to-market strategy during this critical phase, and how can that be avoided? So, I mean, I'll start with like, how did you do it, Oana? And then we can see how you should do it.
It's a great question. I think again, just to the nature of our product and the sector we are in, probably the biggest mistake you could make is once you kind of feel hit product market fit, but then you're being kind of swayed and asked for particularities or customization by your big enterprise customers, that you continue to do that, and then you kind of end up with 20 different versions of your product that you have to probably kind of sell in a different way, position in a different way, and then obviously that kind of dilutes a lot your internal focus. To me, that could be one of the biggest mistakes, especially when it comes to an enterprise a product that you sell. Because, I mean, from our perspective, we work with some of the biggest logistics companies in the world. It's very hard to say no to one of them, considering the potential. But you have to bear in mind that scalability does mean repeatability at some point. And just with that in mind, some of the decisions you might make early on might then bite back later in the process. So deciding on a consistent view of the product and then talking about it in the same way, pricing in the same way for a while is quite important.
Yeah, and I suppose, Michelle, with you, like with the kind of more, you know, educational sales in the business to business, you have also, maybe that could also be a problem for you at Abound, or?
So on the B2B sales side, I think now we first had a product which we already use it internally, so it actually helped to have a very strong message to say we eat our own cookies. We already prove it works. It's a different from I build a new product. Why don't you use, you know, why don't you try it and tell me how it works? So it's actually a very different sales message. We do find some challenges in terms of like the sales cycle with some of the clients, in particularly big banks. The sales cycle can be very, very long. Sometimes it has nothing to do with the product itself. It's a product that people are very impressed, people want, but it's sometimes it's the internal process. Some of the buyers need to go through from their side, which I found it's quite long. But I think, we just need to realize there's differences between, a B2C product and a B2B product. There's also differences between the person you are selling the product to, and then trying to, we try to be responsive as quickly as possible. We have a target of respond within 24 hours for a certain type of query, within 48 hours within certain type of query. But sometimes it's very difficult to change the priority from the counterparty side.
Mm. So do you feel like that was, I mean, to survive this kind of valley of death and that kind of like go-to-market strategy to actually, to survive? I mean, have you gone through it, do you feel like? Are you like on the other side and it's been like, now it's just going up? Or how have you dealt with it?
I definitely see for our specific product and the specific industry we are in, I definitely see an increasing trend of people really want to do more about in the open banking space. And we see ourselves like, have a lot of first mover advantage. We have built the technology a few years ago. We used it, we proved it at the scale. So we have seen, and then I would say the interest has definitely increased because of a number of reasons. One is that the maturity of the ecosystem itself. So more and more people are, open-minded to this kind of open banking ecosystem and, that kind of AI and open banking combination. So the ecosystem is more interested. And then secondly, our track record is also much stronger than, let's say, 4 or 5 years ago. Now we have a lot of data to show we have a complete product. We use it on a daily basis ourselves. So I would say specifically for our case, is actually getting a lot better than I would say 3 years ago.
Okay. So, I mean, Katharine, do you see some of your companies? I mean, they might have product market fit and then they're going to go for like this big growth so they've been planning for and looking forward to. But I mean, are the things, the GTM strategy, does it need to change? And what are the kind of the problems or the issues that people, what are the mistakes do you do during that phase?
Yeah, it's such an interesting question, especially when you consider the typical phase that we look at, which is, this transition from product market fit to scalable growth. And I think that there are probably 3 problems that we might encounter, which is, first of all, not necessarily incorporating customer feedback into product iterations. And this means that there is often misalignment with market needs going forwards. And it can be quite a lagging effect, actually. So not something that is immediately perceived. And then I think the second thing, and we discussed it a little bit actually, is kind of sticking rigidly to initial pricing strategies without any kind of adapting. And that is very tough at this stage because then it subsequently hinders competitiveness. And then lastly, I see this a little bit less often, but being like having a very strong emphasis on acquisition instead of retention. So really focusing solely on acquiring new customers instead of boosting the existing ones. And we've spoken a lot about churn, but that often is the kind of leading indicator, or can be a really substantive indicator to churn rates. And I suppose when we look at these 3 pitfalls that founders, might understandably fall into, the way to mitigate that is reviewing the performance metrics that we've discussed or touched upon in this panel quite assiduously. And then also continuously soliciting customer feedback is a really good other step.
Maybe there's one more thing I would that, which is that I think this shift from product selling to value-based selling, I think we see that's sometimes it's a little difficult for like a startup, especially like a founder who's wearing the product hat and has been, historically talking to customers about like what features and functionality they need, what are the improvements to the product. At scale, you need to sort of like talk a bit more at a broader audience about value instead of like, product features and functionality. And so that shift is almost like, I think sometimes difficult for founders or like early stage teams to do because you're wearing multiple hats. I had a founder tell us like this very funny joke, like where she changes outfits when she is moving from like, an internal meeting talking to her developers about like where the product needs to go to like an external meeting where she's, talking to a set of customers about, the value of the product. So that shift is not as easy as I think, and maybe, I know Oana and Michelle probably know this really well. That shift is not that easy to make on a daily basis, especially for companies that want to scale.
No, that sounds great, actually. Thanks for your answers there. I have it's Tom Stewart. He has a very specific question, which I think would be interesting to hear what you think. And it's about when it comes to like pricing and like free trials. So you're asking like, do you have a view on which of the following is more effective? So free access to basic like tier limited functionality with paid upgrades available, or 2, time-limited free access to a premium tier, allowing users to experience the full product for a period of time. Who wants to go first? Oana, do you have any?
I don't
Michelle.
mind saying that.
No.
I think it really depends on the product. Again, it come back to the marketing testing we are talking about. You sort of need to test it. Why don't you do a A/B testing and see what converts better? because I can see the pros and the cons of both sides. And also this kind of decision is very product and industry specific. And often like, in general, often some people can give you some generic advice, but in the end of the day, we got the best answer ourselves by just trying it.
Yeah. A/B testing, Tom. No kidding. Anyone else? Oana, do you have anything to add to that?
No, it's a great question. I think, again, to Michelle's point, it does depend on the product, the market, and everything that you're doing. For instance, at Dexory, we don't offer anything for free. There always has to be some sort of a commitment from the customer that they're obviously kind of willing to embark on a journey with us. But if we were, I think in our context, the best thing would be to allow the customer to experience the full product and kind of get the full value out of it, because then it's going to be harder for them to potentially shift. Again, doesn't mean that would apply to everything. But if you're very confident in that value, I think that's when, like, allowing a customer to experience that for a period of time, like you take away the toys afterwards. Of course, that's going to be harder to let go of. But I wouldn't just go jumping straight into that without kind of setting in stone a little bit the commitment on both sides to ensure that they maximize that free trial. Because if you just offer it out and then people don't really engage with it, you're kind of like wasting the time there. So probably a bit of a mixed answer, but again, the full value would probably be the one I would go for.
Yeah, no, interesting. I mean, I suppose like Katharine and Kamael, you both see this and people are asking you this question as well, like lots of startups, right? Or, I mean, Katharine, if you want to have a go, what do you say to your startups?
Yeah, I think it's very challenging, actually. And to be honest, it's one of those instances where it can be on such a case-by-case advisory basis as opposed to generalizing across. And so I think it's so contingent on what the company has already tried and tested, what potential reasonable testing plans can they obtain. And then I suppose, lastly, what does that window of testing look like? And I flag that because so many of our startups, between fundraising rounds, there's 12 months to get to the Series A, or perhaps even shorter than that if it's a software-facing company. And so the window to do that is relatively short, which means that there has to be like a degree of like high conviction or hypothesis behind a potential test. And often that's the case where it can be really helpful to talk it through, talk it out loud, and then just execute in a really short time window. So yeah, that's kind of my immediate kind of takeaway from that.
Yeah, that's great. I just have one more question before we're going to have to kind of, because we're running out of time here. But what do you say, like, when companies are like making designing their go-to-market strategies, like what are the biggest mistakes? I mean, overall, what would you say, Kamael?
I think that the biggest thing we see is when you don't actually like kind of include customer feedback in that strategy, or like customer behavior, when it becomes like very like where you're headed as a company 3, 5, 7 years, and like it doesn't particularly map to like how your customers are adopting or using your product. I think that's like to me the biggest disconnect. And all of a sudden you've got this like really great spreadsheet or growth projections that you're sharing with investors, or just and it doesn't particularly map to how your customers are consuming and using your product, and the frequency with which they're like willing to pay for your product also. That to me is like where I see like the biggest mistakes happen. Then you've got to like go back and kind of redo pricing or redo your sales strategy or your go-to-market strategy, because it doesn't particularly map to how the customer moves with your product.
Yeah.
I see some of one of my friend who did a B2B business. One of his advice to me when I started the B2B side of the business is that think hard about your how do you want to build your sales team. One of the mistake he made was trying to build a very big sales team himself instead of leveraging on partnerships. So, and then currently our internal sales team is very small, but then we have a lot of like partners who, we have we have mutual like interest for, for us to do business together. Like one of the partners, they have, in this sector, they have like 60, 70 salesperson. If we can leverage their sales force, it's much more, it makes a lot more sense than us just trying to build a massive team from the beginning. In particularly in the beginning, you sort of like doing a little bit of test about the product and market fit. Like, yes, this is a great product, but did you identify the right customer segment from the beginning? And you still need to have a lot of trial and error. So maybe for some product, it's better to invest in the partners instead of trying to build a massive sales team from the beginning.
Great. And with that, we're gonna thank you all for joining our Sifted Talks today, and thank you for our great panelists, Katharine Spooner, Kamael, Sugrim, Michelle He, and Oana Jinga. It's been amazingly fun to talk to you all, and thank you so much to the audience for all the great questions, and thank you to our partner Stripe that's been for the support. And I'm so sorry that I didn't manage to go through all the questions in the Q&A. It's been great anyway, and I hope that the ones that we did answer actually give some added value. And go in and look at sifted.eu/talks for more Sifted Talks. And yeah, thank you very much.